Welcome to Grow Organically, the podcast where we host candid discussions with wealth management and financial pros. Each episode, we break down factors that drive growth at wealth management firms and how organizations can continue to be forward thinkers in today's competitive landscape. Grow Organically is brought to you by Catchlight. You can access all our podcasts, including show notes and other resources to keep learning, at catchlight.ai. Dan Gilmartin is the host of Grow Organically and is the head of marketing at Catchlight.
Welcome, everybody. Thanks for joining our webinar today. My name is Dan Gilmartin. I'm the head of marketing for Catchlight. I've spent a lot of my career building and marketing software that helps businesses find and connect with their next customer. A quick note about the work that we're about to go through. As we've looked across the industry and studied paths to growth for wealth management firms, we realize that some are easier than others, some are more challenging, some are predictable, some very sporadic. A few months ago, I had the opportunity to sit down and chat with Tim about M&A in particular. And we talked about how firms can seek growth by leveraging capital. That conversation led to the work that we're about to go through and what we believe are the 5 levers of growth in wealth management. We don't have enough time to get into all the details of each lever, so we're going to be publishing a white paper soon to go into deeper insight on each one. Very excited to be joined today by my friend Tim Welsh from Nexus Strategy. Tim, tell us a little bit about yourself.
Thanks so much for having me, Dan. Yes, very excited about the work that we did around marketing and growth strategies for advisors. The firm I started was a consulting firm about 18 years ago. We've been focused on this wealth space and helping advisors think through their basic strategies and approaches to building a better business. So excited to be here today.
Excellent. Thanks, Tim. So we've got a slide here that talks about the market opportunity in the next decade. And really, what a fascinating time to be in this market. Lots of new entrants, lots of M&A that's driving up CAC or client acquisition costs. A lot of money in motion, whether it's great wealth transfer or advisors retiring within the next decade. But clearly, the upside from a business model perspective is strong. Tim, would love to hear your thoughts on where we've been in the last 10 years and where do you think we're going to go in the next 10?
It's an interesting dynamic I think we're seeing right now. After years of double-digit organic growth rates, we've seen the industry sort of stall. New competition has come in, as you mentioned. Other players are coming in on the digital side, offering a lot for a little. People are sort of co-opting the independent fiduciary model into their messaging. So it's become a lot more competitive and challenging. And I think also the bull markets that we've experienced have really sort of led to a level of complacency, if you will. Life is good. Every year I get a raise based on my fee-based model. AUM is wonderful. But we're starting to see that the growth that really drove this industry is slowing down. And it's kind of put a pause on a lot of various strategic approaches as people try to think, hey, how can I restart, recharge my organic growth? And that's kind of what we found out today from the research we did. So that's kind of where we are. I think also going forward, the opportunities you mentioned is massive. Look at those trillions of dollars that could be available for acquisition for advisory firms. So the irony is that we've sort of stalled a little bit, but the good news is that there's tremendous upside facing the industry going forward.
Great, Tim. Thanks for that. And on this next slide, we have a quote from Mark Hurley in his recent white paper called Welcome to the Jungle, where he suggests that it's those who innovate will be the beneficiaries of this coming organic growth opportunity. Tim, how do you see this playing out?
Well, I think Mark's right. He's very much a prognosticator. He's been in the business for a number of years. And I think, the whole idea that organic growth is really what's going to drive the industry going forward makes a lot of sense. We'll talk about M&A in a second, but that's not for everyone. That outsized growth of firms who have been using that channel to really turbocharge their scale typically is not available for everyone. Also, the ability to grow organically brings so much more benefits to your business. One, sustainability. Two, you're prepared for the future. You can invest in your business. And then 3, ultimately, as a value driver for your own business valuation, having that organic growth capability really is going to be paramount going forward for so many reasons. Not only that for your business, but also to attract the right talent. People want to be with a firm that is growing, that's vibrant. So if you don't have that organic growth capability, your business may be at risk ultimately because the number one asset in any advisory firm are the people. And if they don't see opportunities, they may look elsewhere. So lots to talk about around that issue for sure. But yeah, once again, Hurley's got his finger on the pulse of the industry. And I think he's absolutely correct with that assessment.
Yeah, often think of many industries. It's about tech and talent. If you have the right tools in place and you have the right people in place to leverage those tools, you could be a beneficiary of that growth. So here's a slide that we've put together that we think begins to outline what growth can be in different firms. And as we think about innovation, we believe it's important for firms to diversify their sources of growth. And we know at the same time, all firms aren't created equal. Some are in unique positions to capitalize on growth, as we see on the screen here from M&A or cross sell. But that growth, leveraging a balance sheet for M&A, access to leads through other areas, is really firm dependent. But I think if we take a step back and define strategies based on those areas where we can control what we're doing, we can ideally drive better outcomes. So let's dive into each one of these levers. So first, we have M&A. So clearly, more and more deals happening. I think there was a little bit of a lull in Q1 of this year, but things have picked back up. We also know that this lever is not without its own challenges. Tim, the other day we had a conversation about M&A, and you were sharing an interesting stat. And there are about 40 firms, I think you said, that are, and I'll use air quotes here, professional buyers. Love to hear a little bit more about that. And in particular, you started to touch on it just a minute ago, but the impacts of M&A on the other levers.
Yeah, without a doubt. As the industry has sort of become more sophisticated and private equity has entered the arena, it's kind of accrued to a small cadre or cohort, if you will, of what you could describe as professional buyers. And that's defined as someone who's done more than two deals in a year. So there's probably a lot of onesies and twosies out there, but these are the folks who are well capitalized. They have transition teams. They can articulate a message that your firm will be better off with us. So ultimately, the challenge becomes for anyone considering this is, do I have to build infrastructure? Do I have to build all this stuff? Or do I join it? And so that becomes a really strategic question for many firms. And often for many of them, it's just really, you know what, I think I will join it because your ability to have an organic growth engine inside your business is something that I would love to be part of because you're going to grow my outlook, going to grow my business, grow my opportunities, create a career path for my employees. All the things that organic growth delivers is really sort of attractive and why I'd want to join you. So as a compelling message for any buyer or acquirer out there, being able to articulate the fact that you have this capability is extremely valuable. And on the flip side, if I'm looking to sort of exit my business or I want to join, the number one valuation creator driver for my multiple is going to be organic growth because that's what these firms want to acquire as well and showcase that you can grow. You're not a depleted oil well. Your clients are not 85 years old and decumulation. That is a book of business. And what these firms want to buy are actual, accelerating opportunities, grab that talent, as you mentioned, grab that ability to grow. So again, reinforcing the whole idea around organic growth really is the key message here for sure.
So, not to put you on the spot, Tim, but I'm curious to know, and I don't know if there's research out there, perhaps there is, but um, as a smaller firm looking to be acquired, what's the impact of their growth in terms of evaluation they may see, specifically on the organic side?
Right. Well, a number of things go into the valuation factors, but if you talk to some of the professional buyers, the valuation experts, they'll hone in on that one number, organic growth, because it's sort of a roll up of all the other things in your business. That if you are able to grow and you have this capability, that means that your business is successful, that you have compelling value proposition, that you have great people who are actually servicing the clients. You're not losing people. Those are all the key things that people look for. So that multiple really has a massive impact on what someone's willing to pay for your business because they know that it's not just like I mentioned, depleted oil well. There's actually real vibrancy and dynamics in here that I would look for. And again, you will then have multiple people looking at you as an opportunity. And of course, you have much more flexibility, choice, So it just gives you so much more opportunity and options when you have that ability to deliver organic growth consistently over time.
And I think you said on the buy side, firms that are seeking to acquire, if they have a strong organic growth story, they may be the firm of choice for those looking to sell their firm. Is that pretty accurate?
Without a doubt. I mean, there's three things if you talk to some of the expert buyers that they look for. One is, will my clients be better off with you? The second one is, will my staff have a better opportunity that helped me build this business? Will they be better off with you? And then lastly, for me personally as the owner, will I be better off with you? Will I be able to meet my growth earnout targets? Or will it be just a bridge too far for me to try to cross at these multiples and the way the deals are structured? So absolutely, I'm going to do my due diligence on the acquirer and say, hey, show me your growth, show me what you can do. How are we going to be better off? And I can be choosy because it is a seller's market still.
Hmm.
So yeah, any buyer who's looking to come to market with a message, if you can deliver that organic growth story.
And clear on the slide here, we see that oftentimes these deals don't end up in a deal. They fall apart before the deals close. So incumbent upon both sides to be able to tell that story. So as we're talking about organic, let's jump to the next slide where we talk about marketing and prospecting. I like to think of marketing, prospecting, and wealth management broken down into three key steps. Number one is source. Where and how do I acquire my leads? Step two is qualify. Are the leads I acquired right for my business? And if so, how might I segment them? How do I route them to the right advisor within my firm to optimize for conversion? And then lastly, how do I engage? How do I deliver a personalized experience during the what I like to call the get to know you phase? Tim, would love to hear what you're seeing in the market, both the good and the bad, in terms of what firms are doing to drive growth on the marketing front.
Yeah, this is an age old question. Classic 101 tactics here. And I think, starting with your ideal client profile, the more you can be articulate around defining who that person is, where they are in their life stage, how that lines up with how you help them, your service model. And the more specific you can be, the better. We look at a lot of digital conversion metrics, and we find that the campaigns that work the most are the most niche focused. So, for example, if you work with Canadians who are retiring in the US, the more you can talk about how those retirement plan issues of converting assets from Canada to the US, make a webinar on that or a white paper on that or some sort of case study, put that out into the internet, and lo and behold, people will search on it, they'll find it because they're looking for that specific need. So the more specific and niche you can be in these channels, the better off. And that's back to your point around sourcing leads, is having that ideal client profile. Not only does it help you with your marketing, it also helps you with your business itself, because the less workarounds or one-offs you have to do, and you have sort of a homogenized approach to your client base, the more efficient you can be, the more productivity, the more time you'll have to spend on marketing and business development. So sourcing those leads, starting with that client profile, is key. And also, the new channels available. We don't have to take out a billboard on the 405 South or put an ad during the Super Bowl halftime show. We can use these social media channels. They're so helpful in targeting, but you have to have a digital growth engine. And back to your point about how do you qualify leads, you still need to have some form of function inside your business that says, okay, this lead came in, let's contact them right away. Because as you know, people are ripe for the pickings. And if another 45 minutes goes by, you might lose them. And just asking those profiling questions of what they're trying to accomplish, what they're looking for, will tell you right away if they're a qualified lead for your business. And then doing a little bit more profiling, perhaps tapping into some of the great technologies that you have at Catchlight to find more information about these prospects. You can tailor your approach to be able to vector them to that right advisor who specializes in what their needs. So there's tons of opportunities here, but I think having a process, having an approach, being consistent, and taking advantage of this new world order of digital marketing, I think is going to be really, game changing for any advisor. Because again, you don't have to have $1 million budget. You can do this at the small local level and actually expand it through the reach of the internet, which then removes those community barriers that may have been holding you back. So very excited about that.
Yeah, and I think data is key. At Catchlight, we're a data driven firm, both in what we do and what we provide to folks on our platform. And we like to think of customer client acquisition as a flywheel. the data that happens between sourcing and qualifying, what happens between qualify, engage, and engage to close win or close lose a new prospect. Um, Being able to harness, understand that data uh, enables you to create that flywheel to improve how you're sourcing the next group of leads, and how you may think about better qualifying them and routing them within your organization. So, Tim, appreciate that one. So we're going to move on to wallet share. Um, Next slide is it's really we think about the things that happen in our life events, job changes, family dynamics. I think as for an advisor, clearly important to know, and in some ways anticipate life changes. You talked about a Canadian looking to retire in the U.S. and how might um, their retirement plans transfer to the U.S. market. And I think it's important for advisors to look at the life and opportunities to consolidate those different things that a client may have done. But I think oftentimes they may not have a full picture. So Tim, I wonder if you could share some thoughts on tactics that advisors should use to ensure they maximize the opportunity for each one of their clients.
Yeah, fantastic area of study here. The ability to increase wallet share, because you have a client base, and I think this the stats are roughly 40 to 60% of the assets one advisor has is their only wallet share for them right now. So that means that you could literally double your business if you actually pursued what's available to you in your business pipeline with your clients. And the key there is really to ask the questions. And the fact that the financial planning process enables those questions to ask about outside holdings, or when you want to retire, or do you own a business, or are you interested in alternative investments? All of a sudden those are clues for you to then follow up on and say, well, I see that you have this great retirement plan, and you mentioned you're going to retire in the next 8 months. Let's talk about your 401k. Let's talk about retirement income planning and how we can help. And all of a sudden, you've got a great, tremendous opportunity to catch that rollover at the right time, just because you asked those questions. So I know it's that oversimplification there, but financial planning is the basis here, because you do ask those questions. You gather the data that you mentioned, it gives you that intelligence to be able to pinpoint those opportunities and bring them up in discussions in your quarterly meetings. Also, there's some great technologies that have improved a lot. I know account aggregation software has had sort of its blips through the years, but the improvements have been made, so it's much more streamlined to be able to then have the client just aggregate all of their stuff on your portal, so they can see it in one place, and all of a sudden it gives you clues like, wow, I didn't even know they had those municipal bonds sitting over at that broker. We have a great service that we could offer about that. I wouldn't have known that unless they had aggregated that
Yeah.
onto the platform. So that's another great way to do it. And also, the fact that you have this capability just communicates to them that you can manage their whole, financial situation. And there's other great stats that we'll show in the white paper that you discussed there around the proclivity for investors to want to consolidate. They actually want this. They want to bring it all under one house, and one shop. So again, that wallet share opportunity is tremendous. The other aspect I would look at are some other products. I think some roughly like 20% of high net worth investors' money is in cash. And there's some great products out there that you can then manage that cash, FDIC insured, competitive rates, roll that in. And now it's in your shop, and you have the opportunity for them to be able to deploy it with you, or you could bill upon it. And there's a tremendous wallet share gain just on simple aspects around that. So just asking, do you have a bank account? What's your rate? We know the banks are not paying the most favorable rates these days, but just having new products and services is just another great example of how you can really drive growth from your existing client base.
Awesome, Tim. Thanks for that. So, lever four. Next slide here. I often hear from advisors that they live on referrals, and who doesn't love a referral? I love a great referral, and would love more of them. But I also hear at the same time that advisors complain that they're too sporadic, and oftentimes they get in this tricky situation where an existing client referred one of their friends to them, and it's just not the right type of client for the firm, whether it's based on minimums or maybe just the focus area for the firm. I look at that and I say, boy, what a tough way to scale a business. So Tim, some thoughts on how firms should think about referrals as one of the levers of the growth strategy.
Yes, you're absolutely correct. A referral is sort of a blunt instrument. It's not as laser focused as you want, because you might get a lot of candidates that you mentioned that just don't fit your business, or they're just not a right prospect for you. Yet at the same time, the industry is relying roughly 50 to 60% of their new business comes from a referral. So you definitely don't want to ignore them. But I think there's ways that firms can think about having a process in place so that if a referral comes in, what do you do next? Do you call them? Do you send them an email? Do you do a Zoom call? What's sort of the qualifying process around that discussion? Also, at the same time, how do you then communicate back to the person who referred them to you what's happening? So there's transparency, so they know, oh yeah, Joe went to me, we met with him, we sat down, we did a plan, and now they become a great client. Thank you so much. Here's a great gift. Having a process that you don't have to reinvent the wheel every time is key to the foundational aspect of optimizing a referral channel. The other aspect is that the high satisfaction rates that advisors have in the independent space with their clients sort of equates to the fact that they're satisfied. They'd be happy to refer clients. They just don't think of it. So you sort of have to prompt them in a very low key, low touch way to let them know or remind them that you're more than happy to work with similar people that they know of that have a specific financial planning or investment need. And you can do that through some questions answer process. Again, the white paper will showcase a great set of ideas to be able to optimize that. But referrals are definitely the lifeblood of many firms. But you are correct; it is not a predictable way to grow the business. At the same time, though, many tactics and things you can think about to do to operationalize those referrals, remind clients to give them to you, and then just sort of have an ethos of service in your business, because that's really where referrals come from. Because if somebody's happy and satisfied with you, that's really why they're going to prompt to send them someone else your way. So lots to talk about there. Yeah, I'm very excited about the research in the white paper that will have a lot of ideas and tactics around that.
Yeah, process is key for sure. And I think there was sort of the contrarian view of referrals. And I think you're talking about it in the white paper a little bit, that I believe it was Michael Kitces who talked about some of the fastest growing firms rely on referrals the least. How should we take that? How should we look at that statement?
Well, it's a great stat, and I think a lot of it has to do with advisor time, the cost of advisor time. So if you're putting your advisors in the position to having to nurture those relationships, onboard them, that takes them away from doing other services. So you have a very expensive, utility in your business being focused on doing that, whereas you might be able to then offload those tasks to that advisor, to more of a digital marketing program, drive leads that way, and then really free up your advisors to do great service with clients, go out and find more themselves on organic growth strategies. Really becomes the driver there. And I think that stat, as you mentioned, counterintuitive, but it's fascinating that, again, the lifeblood of this industry actually may hold you back, and try to rethink your strategies around that, and then go back to proven digital growth marketing. I mean, it's all that word we all love to say, marketing. You did it once when you're early days. Go back to that, and that is key to that approach, because you want to have the most cost-effective way. It's back to your cost of client acquisition.
Right.
How do you keep that down low? How do you get the ROI? Because again, your other stat is that the present value of a client relationship is pretty amazing because of the retention rates in the business. 20,
Mm-hmm.
30 years annual fee is remarkable. So you really want to optimize that ratio.
Awesome. Thanks for that, Tim. So last but not least, next slide is crossover or cross-sell. Here at Catchlight, we field tons of questions from banks, 401k providers, advisors attached to CPA firms, and lots more. And they want to know how they can identify prospects within a pool of hundreds, if not hundreds of thousands of existing clients to determine who might be an ideal wealth management client. As we think about this lever, Tim, it's certainly one that not all firms can pull, because maybe they don't have some of those existing relationships or those types of clients. But firms within that pool, how do you think they should be thinking about the crossover opportunity?
Another tremendous growth opportunity. I totally agree. A lot of it comes down to education. Being able to have access to that retirement plan account or that company that's sponsoring it, being able to tap into sort of their rhythms of quarterly seminars or educational components around how to think about retirement. Those are all great ways to sort of light a spark under them. To
Right.
again, a lot of times if people don't really know that you offer these services, it can just be the matter of, hey, you know what? We'll do a lunch seminar. We'll come in. We'll talk about these things, and it's amazing how this can really spark. Also, just from a pure prospecting point of view, we've worked with a number of firms who that is their strategy. They look at sort of the local companies that are either going through a transition, they're being acquired, or they're being wound down, or some sort of corporate action is happening. That's when the employees need you the most. That's when they really want to know, okay, yeah, what is about my retirement plans? Will they transfer over? How can I work with you? You've been advising on our plan all this time. Those are great opportunities to park yourself in front of. And once you customize it and tailor it just a little bit, now you have a great entree to all of those employees who are facing a money in motion moment. And what better place to be if you're an advisor? So yeah, definitely great ways to think about that fifth lever of growth.
Yeah, but again, it's not applicable to every firm, but for those that have access to that, a clear strategy and process to identify those who might be an ideal client and a process to engage, super important. So on to the next slide. We've covered a lot here. What we think are the five levers to drive growth within a firm. And we've begun to talk about some thoughts, ideas on how to approach each one. But so if you take a step back and say, where should I start? I think it's important for firms to take stock of where they are today on each of those levers. Are they active in a given lever? How well are they doing? What does the data look like? Have they run tests? Are they operating efficiently in any one of those levers? But I think taking stock of where they're at today and start to build that plan, thinking out 3 years, 5 years. The market landscape is going to change. Today's investor ideal client may be different for a firm in the next 5 or 10 years. I think it's as a marketer, I always go to the importance of conversion and ensuring that you're measuring everything you do. It's the data that tells the truth, and there's a reason that we can test and fail and learn, and then take whatever we've learned and start to test over and over again. And I think it's important that firms should be thinking about running campaigns, looking at different channels, understanding the impacts of each of these different levers on the growth of their business. And then lastly, I would suggest that they identify those wins. Where are you doing really well? And is there an opportunity to double down and scale those areas where you're finding that success? I think it's really important for firms to recognize that, understand where there's opportunity outside of what you're doing today, and go for it. So on to the last slide. Tim, I wonder if I could hand it over to you for a recap on some takeaways.
I couldn't agree with you more, Dan. I think the fact that we also wanted to jump to the outcomes and not actually put in place a strategy is just sort of, a syndrome in the industry for all of us, myself included. But I think if you do think about, okay, where are you now? That assessment, where are you good at? What data do you have? And then where do you want to go? I know it's a very simplified way of thinking about it, but do we need to add another 10 million? Do we need another 100 grand in revenue? And why do we need that? Because while we're thinking about selling the business or we want to expand in these locations, having a real clear strategic marketing and business plan will help give you that sort of, guidepost on what you should be thinking about and what you should be doing. And I think it all comes back again to that target profile. Who is your ideal person that you help the most? And you can find that by looking at your client base. What are the top 10 most favorite clients? Who are they? And then look at them. Like, where did they come from? Are they all same demographic, or do they all do the same things, or what is it? And how do you replicate that? Where do they hang out? How do I get in front of them? That sort of the core piece. And then we give you 5 channels here to think about. And that's a real huge benefit, because a lot of times advisors kind of get sort of stuck in first gear because they're like, I don't even know where to start. I know there's opportunity. You just told me there's $70 trillion, Dan, but how do I go get it? This is a great framework to think about. Pick one for 2024 that you really want to execute on, and do that. Don't do all of them, because that's going to be overwhelming. We can't repave the highway while we're driving on it. And that's the syndrome for many businesses because of just the nature of the beast and how busy you are. And then really think through, how can I run a P&L perhaps? How can I think about this financially, that if I invest the capital, I'll get the return and the results will be very powerful. And again, even if it's, not just so much current income today, it's, as we mentioned all along, that this is a business valuation driver in your business. The multiples will accrue to it. So even if you don't see it today, tomorrow when you look to go and monetize your business, the ROI could be 20, 30x of what you're thinking about spending. So lots going on there. I'm very excited about the research we're going to release around the white paper to hopefully give people a framework to do that. And there's also just tons of resources online. Just check out the great body of knowledge that's out there. Check out all the great Catchlight white papers and resources there that can really help you pick that starting point, put together 1 or 2 things you want to do, and execute on them. And I think that's just the key takeaway for me is keep it simple.
Yeah, yeah, and I think that last bullet there on the slide, embrace change. I think the past of wealth management is certainly, and the present is changing. Who firms are going to go after, how they're going to go after them, value props, who they are as firms, ideal customers. I think a lot of that's going to change, and those firms, as Mark Hurley said, those that embrace or innovate quickly are those that'll benefit disproportionately to the others. So, Tim, I want to thank you. Really enjoyed the conversation. I certainly look forward to finishing up the white paper, where we're going to go deeper on all these levers, share more market insights, playbooks, and metrics that firms can use to benchmark themselves against others in each of these areas. So thank you for that.
Great. Thanks so much, Dan.
Thank you for listening to the Grow Organically podcast. If you enjoyed this episode, click the follow button to be notified when new episodes become available. Visit catchlight.ai, where you can access all our podcasts, including show notes and other resources to keep learning. This podcast was produced by Catchlight Insights, LLC. It is for informational and educational purposes only. The content of this podcast does not constitute an offer or recommendation of any securities and is not intended to provide tax, legal, or investment advice. The views expressed are those of the speakers and not necessarily those of Catchlight or its affiliates, and are as of the date indicated, based on the information available at that time, and may change based on market or other conditions. Catchlight does not assume any duty to update any of the information. Catchlight and other third parties mentioned in the podcast are independent entities and not affiliated. Catchlight does not endorse any investment advisor or provide advice or recommendations to any prospective or existing client of an investment advisor as to the selection or retention of that investment advisor. The information is not intended for any person or entity in any jurisdiction where the distribution or use of such information would be contrary to local law. Third-party trademarks referenced herein are the property of the respective owners. All others are the property of Catchlight Insights, LLC, copyright 2024 Catchlight Insights, LLC. All rights reserved.